In this video, I'll make an introduction to budgeting. I'll take the federal government as an enterprise and coronavirus COVID-19 pandemic as a case example. Budget is a short-term, quantitatively expressed plan. It includes financial and non-financial aspects. It's a blueprint to follow in the upcoming period. Budget plan is a short-term version of the long-term strategy plan. Strategy plan arises from the strategy is the overall enterprise directions. The strategy plan is to accomplish long-term objectives and the budgeting plan is to accomplish short-term objectives. An enterprise has resources and there are opportunities, and some run into the long term and some can be accomplished in the short term. The plan that is prepared, if it is a long-term plan, it is a strategic plan. If it is a short-term plan, it's a budgeting plan. If it is a budgeting plan, then short-term resources are deployed to accomplish short-term opportunities and objectives set. Both plans have gaps. Strategy plan, when current resources don't match with the long-term goals based on opportunities, there is a strategy gap. When current resources don't match with short-term objectives based on opportunities, then there is a budget gap. Budget plan tells where to direct resources, often financial, to where it needs most to accomplish opportunities. So objectives is at the center. There are 4 aspects or dimensions to it: time period, then the income forecast, the cost or expenditure forecast, and the resources are available and deployed to accomplish objectives. Opportunities and threats arise in the environment. Here I've taken Australia, the federal government, as an enterprise where there's an opportunistic or economically active environment. In that environment, there's net immigration, there's booming Asian economic environment, higher prices for coal, minerals, metals, resources are produced in Australia due to the booming economic environment. Elsewhere, more inward tourism, more houses being built due to economically active environment and net immigration, more property transactions, and more consumption. These opportunities allow government to earn more revenue, and much of the revenue comes through taxes. The government can collect more company tax through high resource prices and more economic activity. Can collect more income tax due to more employment and more economic activity. More consumption of goods and services tax due to more net immigration and more economic activity in the environment. Other fuels, excise, customs duty, Medicare levy, superannuation taxes, fringe benefits tax, all these contribute to earning revenue. When there's more trade, more wealth, where people contribute to superannuation than its threshold, and when there is more economic activity, more taxes can be collected. Government also has expenditure. A major expenditure is social security and welfare. There's health, education, defense, general public services, and any other expenses not covered as above. Opportunities and threats arise in the environment. Government as an enterprise can face threatening or economically passive environment. For example, the coronavirus pandemic, the COVID-19 pandemic, and the recent bushfire. The same variables can exist. There can be net immigration by slowing Asian economic environment, low prices for coal, minerals, and metals due to less demand, less inward tourism, fewer houses being built, fewer property transactions, and less consumption, and there's less net immigration due to border closures. When opportunities allow more revenue against expenditure in the budget plan and the budget activity, that leads to a budget surplus of favorable variance. The budget objective is a net cash surplus, and the key performance indicators of that objective are outlined here for underlying cash balance as percentage of gross domestic product, unemployment rate, tax to GDP percentage, and net debt. The threats in the environment can make government to earn less revenue through taxes. It may collect less company tax due to low resource prices and less economic activity, collect less income tax due to pressure on employment and less economic activity, collect less consumption tax due to less net immigration and less consumption, and also collect less other taxes due to less business activity and less economic activity. Government can have more expenditure under adverse environments. Social security and welfare expenditure can increase, health expenditure can increase, education costs can increase due to school closures or adjusting times, or due to alternative ways of pedagogy that was not envisaged due to and also it can increase defense expenditure due to border closures, and general public services also can increase due to the residents looking for various public services due to changes in the adverse environment. There are other expenditures that the government will have to incur. For example, the bushfire recovery package was $76 million, and the combined stimulus and safety packages on the coronavirus pandemic amounts to, for now, $189 billion. That's 9.7% of the gross domestic product. The environmental threats can decrease revenue and increase expenditure than the budget plan and the budget activity, and can erode a budget surplus and leads to an unfavorable variance. For example, a budget objective of the federal government was accomplishing a net cash surplus, and that can be under threat. The key performance indicators of that objective can have adverse outcomes, such as lower underlying cash balance as percentage of GDP, higher unemployment rate, lower tax to GDP percentage, and higher net debt. The environmental opportunities and threats can have a budget impact, and some of this budget impact can be intercepted by other interventions. I've noted here 7 interventions. The first one is the Reserve Bank of Australia decreased the cash rate to 0.75% with an aim to inject liquidity to the economy. Second, Banking Association around 6 months loan repayment deferrals for small businesses to keep them afloat. Third, Big Four banks announce 6 months pause on mortgage repayments for those who are holding residential properties. And fourth, access to government benefit criteria are flexed and payment amounts are increased for those who fall within the safety net and who can become unemployed as a result of this coronavirus pandemic. Fifth, access to superannuation funds based on a certain criteria and they can be accessed tax-free to a certain limit. And six, increased cash payment to employing small and medium-sized businesses and not-for-profit enterprises. It waives the asset test, the time test, but income test is still on. Changes to bankruptcy laws to assist businesses to get through the difficult period. Some enterprises have a master budget. It is the overall budget plan. There are various ways to prepare a master budget. The design is what fits the best to the enterprise. There are three aspects to consider. It's the resource planning through the budgeting, and then the resource control for value creation through management control, and taking responsibility for resource use through responsibility accounting. A master budget can be prepared by functional areas in that the functional areas will prepare their budgets, sales budget, production budget, purchase budget, human resource budget, and in the center is the financial budget that integrates the functional budgets to a holistic master budget. Steps followed in preparing a budget plan. First, prepare the revenue budget. Second, prepare units of production budget. Third, prepare the cost of production for material, labor, and overhead. Fourth, prepare the budget for unsold goods or ending inventory. Then fifth, prepare the cost of production budget. And sixth, prepare the income statement budget. This brings us to the end of the video. Thanks for watching. Professor Indra Besekara.